We will now look briefly at our segment performance. This slide displays the operating profits for our segments compared to the prior year. Of note, our retail and SME, which accounts for 10% of operating profits, experienced a year-over-year increase of $147 million, or 13%, driven primarily by increased loan income and also lower allocated costs. Our payment services unit accounts for 8% of operating profits, and although its operating income is actually up 12% year-over-year, this was offset by increased credit provisions and also consulting fees. Corporate banking contributed $952 billion, up 532, 79% over the prior year, driven primarily by higher net interest income and also fees and commission income. Treasury and correspondent banking, up $943 million, or 35%, driven primarily by gains from foreign exchange and securities activities. Last to note is in fact our life insurance and pension fund business, which contributes 18% of operating profit, increased premium income, which was partially offset by the increased asset tax I noted earlier. On the next slide, here we show our key balance sheet performance indicators. Loans and investment activities at the top left now stand at $162 and $258 billion respectively, and account for 83% of total assets. Top right, deposits continue to reflect a steady increase and now stand at $217 billion. Repurchase agreements are down $50 billion year-over-year, from 143 in June 2014 to $93 billion as at June 2015. This is driven primarily by the migration of our retail repo clients into our unit trust product, which now stands at $20 billion. Bottom left, I note that we continue to have the largest asset base despite the migration of clients to our unit trust, and our assets have grown to over $500 billion, standing now at $509 billion. We continue to have the largest capital base in the sector, and our capital now stands at $87 billion, up 10% year-over-year. Looking at the capital of the entities within the group, our capital is above the regulator benchmarks for all our entities, especially to note NCB Capital Markets and NCB Insurance, which are at 39.5% and 46% versus the regulatory requirements of 10%. Ladies and gentlemen, this is the end of our report on the financial performance, and I will now share the highlights of our corporate social activities during the period under review. We recognize that as we do well, we must engage in initiatives that benefit our stakeholders and the nation at large. With this in mind, for the period being reported, we are proud to have participated in the following corporate social activities in keeping with our nation-building vision. We recently staged our second SME conference at a cost of over $40 million. Themed Growth Through Transformation, over 130 SMEs, as well as exhibitors and resource persons, came together at the Secret Resorts in Montego Bay. With the participation of local and international presenters, SMEs experienced hands-on workshops and interactive sessions on how to access financing and increase productivity through technology, e-commerce, among other relevant areas. A number of participants in the year's conference will be further selected for additional capacity building interventions funded by NCB. We continued our partnership in the Jamaica Business Development Corporation Mobile Clinic Initiative at a cost of $13.5 million. Aimed at strengthening the business capacity of Jamaican MSMEs, this initiative allows MSMEs across Jamaica to access financial support and guidance in developing sound entrepreneurial business practices. Ladies and gentlemen, we are passionate about giving back to our society, and this we channel through our philanthropic arm, NCB Foundation. I am proud to announce that since its formation in 2003, NCB Foundation has donated in excess of $1 billion, impacting over 160,000 Jamaicans. It's worth noting. We are proud to have reached such a milestone and will continue to invest in the development of our nation and ultimately better the lives of our fellow Jamaicans, and wish to thank our partners, volunteers, and all key stakeholders for enabling such a significant accomplishment. Even as we celebrate this milestone, we recognize that there's much work to be done. To this end, we have relaunched our Jamaica Education Initiative program, through which we invest a percentage of our key card sales to fund education. Essentially, we want to tangibly demonstrate the link between our financial performance and our nation-building efforts. Since the introduction of our flagship scholarship and grants program, over 3,000 students have benefited from our support, which has totaled over $245 million. And this year, we have committed $30 million to fund and administer the program. Applications closed this last month, and we have received just under 7,000 applications, representing an increase of 3,000 over last year. Ladies and gentlemen, our partnership with the MVP Track and Field Club dates back more than 10 years, with the most recent being a $30 million donation. This donation will be provided over 3 years and will see students receiving nutritional and training assistance. In this way, we will ensure that both athletic and educational needs are being met. We recently engaged 2 track and field athletes, Elaine Thompson and Julian Fort, as our new NCB brand ambassadors. In support of Brand Jamaica, we will be launching a media campaign during the upcoming World Championships in August under the theme Excellence JA. Ladies and gentlemen, in closing, I'd like to note that we recently hosted our Long Service Award and wish to acknowledge our 271 employees for their years of service to the organization, which range between 10 and 35 years. We continue to recognize, reward, and invest in our people for the success of all our stakeholders. We remain committed to building Jamaica and ensuring this continues to be the place we want to live, raise our children, and do business. Thanks to all our stakeholders for supporting and enabling us to deliver on this important mission. I thank you for your attention and now hand over the proceedings to our Group Managing Director, Patrick Hilton, who will discuss the way forward. Thanks.
All right. Thank you very much, Dennis. Let me join in welcoming all present here physically among the various categories that Dennis mentioned earlier, as well as those who are participating by way of the World Wide Web. I think, in summary, one can say that our company continued to demonstrate very strong performance in what is a very competitive and still, in spite of the progress we have made on the economic front, still a very challenging environment. And challenging from a number of perspectives, and we'll talk about some of that later on. I want to, before I go any further, use the opportunity to thank all our stakeholders, all who have contributed to the performance that we're here talking about today. And there are many, ranging from our staff, to include our board of directors, to include our customers, our suppliers, our media partners, or other partners in various forms and forums who help to make us the kind of business that we are. So I wanted to use the opportunity to thank all of you. In terms of the current performance, I want to make a few comments, which is to say that at the last few meetings, we have outlined and we continue to pursue essentially 4 strategic pillars. And then we underpin these with some special initiatives. The first among these, which I'll mention, and you would have heard it before, is our sales and service effectiveness, or sales and service excellence. And here the focus is on improving employee productivity from a sales perspective, in terms of getting more sales out of each salesperson, in terms of their net contribution, and there are a number of initiatives going on in that regard. And at the same time, seeking to improve the customer experience across all channels and all businesses within the NCB group. The second one, which I'll mention again, is what we refer to as the credit journey. And we have deliberately called it a journey because we recognize that it is in a constant state of evolution, a constant state of development. And what we are essentially doing is seeking to improve the way in which we administer credit, the way in which we deliver credit, the way in which we analyze risk and manage risk across all sectors and subsectors in the society, ranging from personal credit through to large corporate credit, right? And in that regard, one of our areas of focus or intention is to address an area of financial inclusion that does not necessarily get a lot of attention. Most of the time we talk about financial inclusion, and given where we are, it is perhaps appropriate we talk about people having access to bank accounts. Here we're talking about people having access to finance, right, and trying to improve that across all levels of the social domain. The third is around payment services enhancement. And for now, the emphasis is on reducing the use of cash and checks. We have said it repeatedly. Cash and checks are expensive. They are not the most efficient means of making payment. And so as a leading financial institution, we are interested in, we have a responsibility, and so we are focused on improving the payments landscape. Right now, the emphasis is on using credit and debit cards, but as we go through the process, we are looking at other initiatives, and we'll speak more about those as it is appropriate. The fourth strategic pillar, of course, which we have spoken about many times before, is lean financial services. Where essentially the focus is on improving the customer experience while at the same time reducing the cost to serve. Right? And we have seen many examples of that, perhaps the most notable among them being our Bank on the Go, which has been more successful than we had initially anticipated, quite frankly, because the rate of adoption has been higher than we had programmed or projected. And so now what we're looking at is broadening and deepening those services so as to respond to the feedback that we're getting from our customer. And quite frankly, the necessity of doing so in the current environment as we seek to improve our efficiency and our performance. And of course, underpinning these four strategic pillars are our focus on world-class people, world-class processes, and world-class technology, right? So those will underscore those initiatives In terms of the future, we recognize that as an institution, quite frankly, as an industry, we are facing a number of challenges. But perhaps more importantly, we also see where there are a number of significant opportunities within those challenges and even outside of the challenges. And so we are focused on embracing and executing on those. Among the challenges, from our perspective, it is a good thing for Jamaica, but we see the interest rate path continue to trend down. And of course, the consequence of that from our perspective will be further compression to margins. Right? So we have to continue to drive efficiency within our organization. We see where the recent success of the government and other initiatives that the government have undertaken are likely to lead to increased liquidity within the market. And so that will further intensify competition as institutions will be searching for yield and searching for assets. And of course, we know with the new banking services bill, there will be the introduction of agency banking, which will change the operating model of a number of players and will pose some challenges in terms of the historical advantage which was normally associated with scale and the proliferation of a branch network across the island. But these are things which, as I said, even as they create, and I mentioned another one too, mobile banking, when that comes in place, of course, is going to not only increase the number of players in the industry, but even has the potential to disrupt elements of the industry in terms of the way in which payments and so on are performed. As I said, these are some of the challenges. The country growth is still low, right, and so, and I could go on and list a lot of them. In terms of our response, however, our focus is on understanding the opportunities created in what I would describe as a new economy, as the Jamaican economy itself continues to evolve, and then to position ourselves appropriately. I mentioned before that for the future, we are going to be focusing on deepening and expanding our suite of services across the bank on the go channel. The development of our own digital strategy as we focus on looking on the ways in which we do things and seeking to, in some instances, perhaps even reimagine how they could be done and starting to implement those as part of disrupting our own business model rather than waiting on somebody else to disrupt it. And of course, there will be the continued relentless focus on the execution of the initiative to improve the skills, capabilities, and competencies of our people, as well as our technology. So in closing, ladies and gentlemen, I want to share with you the words of a gentleman who many of you may be familiar with. His name is T.E. Lawrence, and he said that all men dream, but not equally. Those who dream by night in the dusty recesses of their mind wake in the day to find that it was vanity. But the dreamers of day are dangerous men, for they may act their dreams with open eyes to make it their reality. We, ladies and gentlemen, are the dreamers of day, and quite frankly, the time to start to act is now, and that's where we are. Thank you. I think,
right.
You're the moderator as well.
I forgot about that. I was looking at Nadine, so got confused. All right, I suppose we can take questions now. Owen?
So Staple, you would have lost school's challenge quiz. A little too slow on the buzzer.
Both yourself and the Deputy Managing Director, Mr. Cohen, spoke about challenges. Now, on a scale of 1 to 10, 10 being the most difficult, what would you say are the top 3 challenges facing the National Commercial Bank Group? And I also want to ask Dennis, that's for you, Patrick, for Dennis, the uptick in non-performing loans, can you say whether it was from the credit card and what categories those loans fall in, the non-performing loans? Also, sure. Mr. Hilton, the Jamaica is successfully retiring some debt on the Petro-Carib thing. We had a bond issue underwritten by Bank of America and Citigroup. How does it impact on the sector and on the lives of your customers?
So in terms of the top three challenges, I think that, you know, the biggest challenge we face, quite frankly, as a country, I don't think NCB is any different as an institution, is for our people to recognize that, you know, every difficulty, every challenge brings with it opportunity. And so the attitude, the mindset, which is really focused around what is the opportunity and how can we execute on it, how can we preempt and understand the implications of what is happening and execute on change, make changes to the way in which we think, the way in which we function, ahead of, you know, some imperative causing us to change is the biggest challenge. So I say to you, Owen, that, you know, when we look at the environment and we look at what is happening, right, clearly we will have to change the way in which we do many things, right? But intuitively, most people are afraid of change, right? People like the status quo because they are comfortable with it. Change brings uncertainty, and so it creates some discomfort. And I'm saying to you that to the extent that we are successful as an organization in getting more of our people to welcome change, to look forward to it, to embrace it with a positive spirit and a positive disposition and a positive approach, with our approach which says, yes, this is something I want to take on because I can use it to create opportunity, then I think that's the biggest challenge that we have, right? And I suspect it is a challenge that goes well beyond the walls of our organization and into the wider society, right? The second challenge, which I think is our own effective execution. Because a lot of times we identify initiatives and so on. We identify that can have meaningful impact, but just the way in which we execute on it might be suboptimal because the high-level execution requires sustained discipline over a long period of time, right? And again, it's nothing peculiar. It's a general comment. It applies generally. If you look at high-performing individuals, whether in the athletics arena, in the academic sphere and so on, these are people who put out extra effort, who are very disciplined and very focused, right? And who focus on execution relentlessly. And I'm saying that the same thing is true of our society. The same thing is true. And then the third thing, which I think we have to get around, is this whole notion of how we, and it's linked to the second one, how we create and capture the value in the technology resources that are available to us. Because I think there is a real opportunity to significantly change the way in which things are done to make them more effective and more efficient. But it also requires people to be very conversant with new technology. It requires that the technology be structured and implemented in a way which makes it effective. And if we can have those two come together, then I think we can leapfrog as an institution, and quite frankly, as a country, in terms of our overall performance. In terms of the retirement of the debt and the successful raising of the bond issue, I think it is a great thing. I think it is a wonderful signal. It is a clear indication from the investor community of confidence in the economic program, confidence in the successes to date. Clearly, we are not out of the woods yet. But, you know, when we look at where we are coming from and where we were 2 years ago, as against where we are today, we have a huge issue which is massively oversubscribed. And so quickly, it is clear that investors have bought into the economic model. The repayment of the debt, as I said, you see some of the impact in terms of the reduction of debt to GDP, which is a very good signal, right? We see where it is going to also result in the government taking additional resources to pre-fund some of its own obligations, right? Which puts the government in a better position in terms of the yield they'll have to pay on securities going forward. It creates some challenges for financial institutions in terms of the interest rate path, and I alluded to that earlier on. But you know, at the end of the day, what is good for Jamaica is good for us. And so we are happy to see it happen. We embrace it and we look forward to the benefits that will flow from it. And that essentially is our attitude and our approach. I mean, these investors have the option of investing in so many other things around the world. And the fact that they have chosen to put their money there and for such extended periods of time, I think, speaks for itself.
Okay. I'd probably add as well that I think early in the discussion, Patrick would have mentioned the increased liquidity that's expected in the market. This transaction takes assets off the balance sheet of the government of Venezuela and provides the opportunity for institutions to bring assets onto their balance sheets. So I think in an environment where there's the expectation that there'll be a dearth of assets for investing the excess liquidity, I think additional bonds to the market provides opportunities for the local financial sector, which effectively is more yield opportunities and probably also more potential for trading. So I think there is in fact some opportunity for the local financial sector coming out of that transaction, you know, to add to the fact that, as Patrick mentioned, the challenges which will come with the improvement in the rating of the government, you know, and therefore justify lower yields. You had mentioned earlier, asked about the credit losses. What we have seen is, in fact, the increase is driven primarily in the personal portfolio. We have many instances where we're seeing persons being laid off, persons who have lost their jobs and migrated. I think that's the primary area which we're seeing. It manifests itself in personal loans. It also manifests itself in the performance related to the credit card portfolio, where I'd mentioned in my presentation earlier that we had seen an increase in the credit losses in relation to credit cards. Mr. Staple?
Good morning.
Good morning.
I would like to congratulate NCB, the board of directors, the employees, and the administrators for the good job that was done, that has been done so far to achieve the success we have achieved. Despite the challenges we face, it goes to show the determination that we have as a people, that we can make things happen if we want it to happen, when we want it to happen. And I would say congratulations again, Mr. Cohen, Mr. Hilton, the board of directors, the employees, for the contribution that they have made and continue to make. I can safely say that when it comes to the frontline people, they have been doing a tremendous job. And this, to me, has kept our customers, or big and small customers, in this bank. And we have said to ourselves, we will not leave, because NCB is giving the service that we require and continues to do.
Thank you.
Mr. Chair, you mentioned that the way forward is credit and debit cards. But I would like to find out, how is the security system going to cover adequately this debit and credit card that we are going to pursue for the future? How is that being implemented? Is that taking into consideration that, look, we might have some problems, but the vast amount of the so-called problems will be corrected, will be taken care of, and as customers, we will not be confronted with that much of a security problem. We guarantee that the security that is in place to take care of all of this.
Well, Mr. Staple, I think security concerns reside in whatever systems you use. What is happening is that it's probably becoming more electronic, and we have had issues, and I think almost all financial institutions across the world have done that. Managing those exposures is a journey. Patrick made reference to a journey earlier, because what happens is that invariably one can't anticipate what's going to be the next innovation as far as that kind of activity is concerned. What we have done, and I can tell you we have invested heavily. In my presentation, I made reference to depreciation charges going up because of continued investment in our IT infrastructure. And that captures also our investment in order to protect ourselves against that type of activity. We have gone as far as to engage entities outside of Jamaica who constantly monitor our website, who constantly monitor the activities related to the NCB's IT platform in relation to the World Wide Web, shutting down activities which suggest that there are persons who are engaging in type of phishing or farming activities to try to defraud our customers. I must say to you that when we look at the statistics, we have seen quite a bit of improvement, certainly over the past year. The time to shut down these intruders has dropped dramatically. The number of intrusions that we've seen has also dropped dramatically. The losses that we've seen coming from that activity has also declined. So I'd say to you that we're confident that we're doing the right thing in addressing these issues. We've seen it in the numbers. And as I said to you, it's a journey. We will continue to try to be on top of it, and we will continue to invest to ensure that our systems and our customers are protected.
Let me just add something to that, because you made reference to cards specifically. And we are invested in the latest technology in terms of how cards are read and so on. That will protect not only the institution but our customers from these types of activities. So in line with what Mr. Cohen was saying, there is a huge investment because we recognize the risks, and we are using lessons learned by others to inform our own strategy in terms of how to deal with these things, rather than waiting for it to happen to us.
Thank you very much. Earlier on in 2015, NCB raised 250 million US, that's about 29 billion Jamaican, in debt backed by future credit card receipts, which represents the bank's return to securitized receivables. Can you explain a little bit about this securitization of receivables and how it is impacting on the bank itself?
Well, all it is, they don't get carried away by the legal terminology. It's simply a borrowing, and all that happens is that the institution constantly have inflows coming into it from credit card transactions that happens at merchants. All that simply happens is that persons have borrowed, we have borrowed money from investors, and they have access to those flows as a part of their security package. That's simply all it is. It may sound a little bit complicated, but it's not. It's certainly it's a simple borrowing, and all that happens is that the inflows which are coming into NCB from the security package for the investors.
Let me add a comment. It's something we have done for the last 20 years, Mr. Stable.
Right.
Yes. The market had sort of closed up following the global financial crisis, and the market has opened up since that. We have done it in relation not only to credit cards, but in relation to what we call diversified payment rates. For simplicity's sake, you might say primarily remittances and so on, things of that nature. So it's something that we have done many times, we have done successfully for a long time, and we think it is opportune and appropriate for us to use it as a source of funding at this time.
Am I correct in saying that over 10% of your liabilities are now based on securitization of your receivables? Would I be correct in assuming that?
Yeah, there are thereabouts. There are thereabouts.
Okay. And this will continue to be, basically?
Well, it depends. We have to be opportunistic. We have to look at where the balance of advantage lies at any point in time. And if we think that there is advantage in further accessing this market and the opportunity is there, then we'll do so. If we think it lies somewhere else, then we look at those other avenues. So it depends on how things evolve.
And lastly, so we appreciate the 45 cents you have declared to shareholders. And we were expecting a little bit more, but when we take into consideration that the asset tax, as you rightly said, impacted somehow on your bottom line. But I hope that at the end of the year, this will level off. So at the end of the year, we'll expect to see a little bit higher.
May we all live in hopes.
Thank you very much.
You're welcome.
Any more questions? Okay, that's it. Well, no more questions. Let me just take the opportunity to thank you all for taking the time to hear our story. It has been a pleasure sharing it with you, and we certainly look forward to doing it again a few months from now. I think there are refreshments at the back. This is the end of the formal proceedings. We can now have a drink, have a talk. I'm sure there are some more questions which have been left for the informal session. Thanks for your time, and enjoy the rest of the evening. Thanks, bye.